Hey, it's Cal Ewing here coming at you on a beautiful winter day in Calgary, Alberta, Canada. And today I'm going to talk about some of the benefits and reasons why I love investing in mortgage notes. Now, as many of you know, I'm a Canadian that invests in the US strictly. So all of what I'm about to say really only applies to buying US notes. I don't really know much about buying notes, and even if it's possible in other countries. But in the US, you certainly can, and here's some of my top reasons to do so. So number one is probably the most obvious when people think about buying mortgage notes, is the passive income, right? So we are buying mortgages, we become the bank, and then the borrower on the mortgage note is now having to pay us a monthly payment. Most times that's a monthly principal and interest payment over a certain period of time, the term of the note. Sometimes it's a very long term, like a 30-year note. Sometimes it might be a short term, like 12 months, 6 months, a couple years. So various term lengths, but overall we're collecting payments from the borrower, usually on a scheduled time frame. Could be bi-weekly, could be monthly, might even be at the very end of the maturity of the loan. But in general, most people are buying notes for the passive income and collecting those principal and interest payments every month. And really, once you get the note purchased and it's settled, you got your servicing company in place to handle the day-to-day management of the note, it really is passive income and monthly cash flows. So if you're trying to find ways of growing your different sources of income, growing your wealth passively without having to trade your time for money, buying notes is a great way to do so. The next thing is, it's actually also a way of acquiring property. So note investors can either pursue what we call performing notes, where the borrowers are paying regularly and getting that passive income, but we can also pursue what are called non-performing notes, where the borrowers have stopped making their payments. And one way that you can acquire more properties for your portfolio, whether that's properties to hold as rentals or properties that you can acquire, then remodel and sell, like fix and flips. One way to do that is to purchase non-performing loans where the borrowers have either just shown no effort in trying to make payments to get caught up. So they've basically given up on their mortgages. Perhaps it's because the borrowers have passed away, or maybe they've just walked out, decided that they can't afford the house, so they've just left. So there's lots of different scenarios, but in any of these cases, you can acquire these non-performing mortgages where the borrowers aren't paying. You can get these mortgage notes very cheap from the sellers, sometimes 50 cents on the dollar, sometimes even less. Buy the note and then go ahead and foreclose on the borrower, and now you own the property. Depending on how the auction goes, but there's ways of acquiring the property or taking back ownership of that property, and now that property is yours and you can do with it as you wish. So it's a way of acquiring pretty good property sometimes without any competition. So you're not dealing with other investors, or if it's a very hot real estate market, other home buyers who are maybe making ridiculous offers that don't make sense for you as an investor. But if you buy a note cheaply and then take the time and effort and hire an attorney and be patient, you can foreclose and get some great property. All right. Another one is kind of similar, is there's a lot of different exit strategies. So I already mentioned a bunch of these. One is to stay in it long term as a cash flow generating machine. You could always eventually sell the note to another note investor if you need out, if you need to cash out for a different investment, or you need the money out of your note deal. You can always sell mortgage notes to other mortgage note investors. And then, of course, when the borrower doesn't pay, you can foreclose, like I said. But there's a way to avoid foreclosures, which I've talked about in other videos, where you can actually go to a borrower that's having trouble making their payments or has stopped making their mortgage payments, and just saying, look, if this isn't working for you, perhaps we could negotiate a cash for keys scenario where you give me the deed because I own the note, I'm your lender. You give me the deed to the property. We can have you leave the property and just walk away. I won't foreclose on you, which is going to affect your credit for 7 years. And when you're ready to move out here in the next few weeks, once you've packed and everything, I'm going to give you, $5,000 to move out and make sure that you're leaving with the house in good shape. You're not destroying the house when you leave, kind of thing. So we call that a deed in lieu of foreclosure, and that's a great way to acquire properties as well. So those are just some of the ways that we can get out of a mortgage note investment deal. There's also things called partials, which I'll go into. They're a little bit more complicated. I'll go into in a different video, but there's a lot of flexibility when you're buying notes as far as how you can exit them and how you can profit from them, which I really like. Another reason I love notes is higher yields, especially when you're comparing to mutual funds, stocks, bonds. Obviously, you can get some great yields if you buy the right stocks, but if you're not super savvy, you can set yourself up so you know what you're getting when you're buying a note. You know what your yield is going to be before you buy it, unlike stocks where you really don't know which way the stock is going to go, right? And another great thing with increasing yields is if you can buy a mortgage note at a discounted price, you can actually earn a higher return than what the interest rate is that the borrower is paying. So let's just say I'm looking to buy a note where the borrower is paying 7% interest, okay? Well, they're paying 7% on the total amount of money that they borrowed. But if I can buy that note at 80 cents on the dollar, basically paying 80% of the principal balance, well, my yield or my return is going to be a lot higher than the 7% interest that borrower is paying. And so I can actually, by buying at discounts, I can earn a significantly higher return on my money than the actual interest rate on the note that I'm buying. And this is what I do all the time. So I'm always buying at a discount, and I typically target notes where I can buy for a 15% yield or return based on just the cash flow coming in, the payments coming in. So you can get higher yields than a lot of other investments while still being secured to physical, tangible assets like residential properties or commercial buildings. Another benefit is diversification. So by buying notes, maybe buying some properties, buying precious metals, having some money in the stock market, it's really easy to diversify into notes. There's not a lot of, skill required to buy a note. You have to know the basics, but it's not super complicated. You don't have to know the insides and outs of a tech company like you might need to do to be really successful in buying stocks. It's pretty straightforward, and you can easily diversify your portfolio by adding a couple notes in with everything else that you're buying. Another great one is lower capital requirements. So I just actually bought a note yesterday, 2 days ago, where I bought the note for $11,500. I got another one for $30,000 recently, another one for $21,000. So we're not talking about having huge amounts of money invested like you may need to if you're buying a rental property or a house to fix and flip. Now, of course, you can finance investment properties, so you can get 60, 70, sometimes maybe even 80% from a mortgage when you're buying a investment property. But even still, coming up with the down payment can be a lot of money depending on what the property is and where you're located. But with mortgage notes, you can buy really good performing mortgage notes or non-performing notes for really a couple $1,000s all the way up to the millions. Some of the other things I really like are flexibility. So I sort of mentioned this, is we can actually work, because we own the note, we're the bank, we have the ability to work with the borrower. Unlike giant banks like Chase Bank or Wells Fargo, they're so massive that they can't work with a borrower individually very well if they have trouble and problems making their payments. But because we're small players, right? We're just individual people, we can actually reach out to the borrower and just figure out, if they're having trouble making their payments on time or consistently, but they want to stay in their home and they're trying. Well, we can listen to them and see what the problem is, and maybe we can modify the terms of the loan so that they can afford to stay. Because no one wants to foreclose and kick someone out of their home. And if there's an easy fix, we can just tweak the note a little bit and have them get back on track again. That's something that we as note investors have the flexibility to do, which is really good. And then the other flexibility, as I mentioned before, is all the various exit strategies that we have, whether that's a foreclosure or a deed in lieu or selling off a note, selling off partial payments to other investors, etc. Some of the other benefits is, this is compared to my previous business where I was wholesaling a lot of houses from around 2016 to 2019 down in Houston. And it is a grind for sure. It's a good business. You can make a lot of great money, but it is a grind. And some of the things I noticed in comparing wholesaling houses to buying notes are the following. Number one, buying notes is a lot less competitive. So when I was wholesaling houses, I'd be sending out letters to motivated sellers, hoping that some people would want to sell me their house for cash. We did some cold calling, we did voicemail drops, we did Facebook and Google ads. We did all these different ways of marketing and spent a lot of money on marketing. What I routinely found when I talked to potential sellers, homeowners that wanted to sell, is that I was one of maybe 20 letters that they'd gotten in the mail that month from other investors, or 10 different phone calls they'd received that week from other investment companies trying to buy houses. So it was very competitive, and that resulted in making it hard to get deals done, because a lot of times I'd get outbid by other investors that for whatever reason would offer more than I felt I could pay for a house. The note space is a lot different. There is competition out there, which is good, but I found, and I was very surprised to find, that there's a lot less competition out there when buying notes than when buying houses. And the other thing is because we are reaching out directly to bank asset managers or other note investors or servicing companies that have many, many note investors as clients. Where was I going with this? Oh, because we're reaching out to these institutions, they're not emotionally tied to these assets. When you're dealing with a homeowner, like they've had kids and a family in that house, they decorated the house the way they wanted, they have a lot of pride of ownership, their whole lives unfold in between those walls. And so when you're dealing with people that are selling their homes, they usually respond with a lot of emotion, and rightfully so, but they make a lot of decisions based on emotion. There's a lot of sometimes family drama where disagreements among different members of the family as to whether they want to sell and how much they're willing to accept. And so when you're buying houses, there's a lot of drama that you have to deal with, and you have to get good at helping get people through all this drama, but it can be really physically draining. And I've found that when I'm dealing with note sellers, none of that drama is there. We're just talking about price. It's pretty easy to negotiate a price, and if you need to negotiate a lower price, you need to have reasons why. So maybe it's because you found out that the property wasn't worth as much as the note seller said it was, because you got a broker price opinion. Or maybe you find out that there's property taxes owing that you're going to have to pay when you buy the note. So you can tell them to drop the price because you're going to have to pay for the taxes. So it's very numbers driven. It's very logical when you're negotiating with a note seller. It's really low stress. There's no drama to deal with. No one's backing out at the last minute. It's a lot less stress and headache when you're just dealing with notes. And then, so I said before, marketing costs was the other thing. So when I was wholesaling houses, I was spending $4 or $5 a month in marketing, just trying to find enough deals to close on so that I could make a living. That's a huge amount of marketing costs for my business. And eventually it just got to be too much. Like the cost I was having to pay for marketing in order to get one deal just kept going up and up and up. And the great thing about note investing is the marketing costs are very low, because most of it is just through networking online. I don't have to spend thousands of dollars in direct mail or Google ads or Facebook ads or bandit signs or text blasts, any of those things that wholesalers are using to find motivated home sellers. We don't have to do in the note space. So compared to buying houses, it's cheaper, it's easier, it's less drama, less emotion, and all around I just find it's a relief to be able to be in the note space instead of the house buying space. So let's see if I missed anything else. We have passive income. We got the ability to buy properties if you pursue non-performing notes. We have flexibility. We can work with the borrowers and get them on track and staying in their homes and paying again. We've got diversification of our portfolio. Oh, the one I missed was reduced management hassle. So when you're a landlord or even a house flipper, you got people that you got to deal with. When you're a landlord, you got to deal with the 3 T's, which is tenants. That can be tough to deal with. Toilets. So, the old adage, the toilet breaks in the middle of the night, and who are they going to call? They're going to call their landlord to deal with it, right? Tenants, toilets, and trash outs. So tenant vacates the property and leave the place in a disaster, trash everywhere that you have to deal with. No one likes all those parts of being a landlord. And same thing when you're fixing and flipping houses. You got to deal with all the contractors and tradespeople, and sometimes that can be a huge nightmare if you don't have a good team. With notes, you don't have to worry about any of those things. Because you're the lender, you don't have to worry about repairs. That's up to the property owner, who's your borrower, to repair the house. They have to fix the toilet and call the plumber in the middle of the night. They have to pay for it. So all of the headaches of management are gone when you own a note. And the other great thing is there are companies out there called loan servicing companies, and they handle all the day-to-day management for note investors and lenders. So they reach out to the borrowers, they collect the payments, they do all the accounting and bookkeeping and keep track of how much has been paid and how much goes towards interest and how much goes towards the principal pay down. They keep track of late penalties. They send out reporting to the borrower and the lender. If a borrower is behind, they send out foreclosure notices and things like that. So they take away all of the day-to-day BS that no one really wants to do anyways, and allow a note investor to sit back and focus on other things and collect the monthly cash flow. So the management is another key thing that I really, really love about investing in notes. So that's a big list. As you can see, note investing is really awesome. There's advantages and disadvantages to every real estate investing strategy, and every strategy for investing your money out there. There's always pros and cons, but I hope you enjoyed some of these pros. Feel free to leave in the comments any pros that I forgot, any benefits to investing in notes that I may have forgotten. And if you've got any questions about note investing or want to find ways that you can get involved in buying notes, I partner with people who want to get their money working. They like the idea of notes and they want to earn above average returns on their money by buying or investing in mortgage notes secured to residential real estate. So if you're interested in learning more, go to talkwithcalewing.com or simply just leave me a note under this video and we can start a conversation. I'm Cal Ewing. See you on the next video.